Hi there, you're watching Market Cafe, and over the next 1 hour, me and Cheryl D'Souza will take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, let's take a look at what the Wall Street is really doing, and a lot is what the Wall Street is currently doing because we did have a very strong handover coming into this morning from Wall Street. Stocks, of course, surged during Thursday's regular session. So when you take a look at S&P 500, you're looking at a rise of about 1.7% coming in and a close above the 5,700 level for the first time as well. Those are the kind of gains that you're seeing there. But when you take a look at blue chip Dow, that's where you're seeing some stellar moves coming in. Ended the day with more than 500 points of an uptick coming in there and posted its first ever close above 42,000, and that's the handover for Dow as well. When you take a look at Nasdaq, also good gains coming in for that one. 2.5% is how much it advanced as well. And when you take a look at Dow and S&P 500, both of them closed above both of them did manage to eke out those all-time record levels, and those are the kind of levels that we currently did see. Now, of course, the Fed's decision also marked the first rate cut since 2020, and the markets were really cheering all of that. When you take a look at the weekly moves as well, you're seeing good gains coming in for the week as well. S&P 500 ended up nearly 1.6% for the week. When you take a look at Dow as well, toting a 1.5% jump, and that's where Dow is at in terms of a weekly move. 1.9% advance for the Nasdaq as well. So a very good week and a very good day coming in for all of the three indices, Cheryl.
Absolutely. A very good morning to you, Shreyansi. So a good handover coming in from the US markets, and it was expected. We actually saw the US futures also rally through the course of the day. But let's take a look at what actually the commodity markets are doing at this point in time and what the commodity handover we've got from the commodity markets. Because if you look at the crude prices, it did end on a higher level in the overnight trading session. And in fact, this morning as well, if you look at the crude, it's holding on to those levels that it actually shut shop in the overnight trading session. So now if you look at the crude, it is around that $73.69 per barrel. Remember, this week alone, the crude has made a good comeback, a healthy comeback of about 4.3% so far. If you look at the WTI crude, it is at the $72 per barrel level, and that one also has seen gains above 4.8% so far this week. So yes, you've got a healthy bounce back coming in for crude oil prices. Remember, the situation was pretty different if you had to see crude prices a week ago or so, because you had a sharp downtick coming in the crude oil prices. From there on now, it has given a very healthy bounce back. Remember that, like I mentioned, the crude had fallen to a 3-year low on September 10th. If you talk about some of the data, you had the crude inventories in the United States, which is the world's top producer now. It actually fell to one-year low last week. That's as per the data that was released on Wednesday. Also, right now, if you look at the geopolitical tensions, that's also fueling the kind of surge that you're seeing in the oil prices at this point in time. So crude right now holding on to gain to levels above the $72 or $73 per barrel per mark when you talk about Brent, at least, Shreyansi.
Well, absolutely, and safe haven appeal is also geopolitical tensions, and because of that, safe haven appeal is also something that kept gold prices on a good footing, because gold prices also rebounded, and we did see that 0.7% gain coming in for gold prices as well. But let's get you some more interesting news and updates. And a day after the Federal Reserve serves that landmark 50 basis point cut, US President Joe Biden reacts, says he expects the central bank to continue cutting rates amid promises of working towards lowering cost pressures for Americans. Additionally, he also alluded to inflation nearing that 2% target, calling Fed's supersized cut good news for consumers. But even as macros favor policy easing, Biden also believes that there's more to be done at this point.
And more commentary coming in on the Federal Reserve action. Billionaire investor Ray Dalio flagged that the US economy still faces an enormous amount of debt. The Bridgewater founder expects the central bank to maintain its balancing act when it comes to the interest rates, while Ray Dalio also listed debt as well as money and the economic cycle as one of the top 5 forces influencing the global economy. Expanding on his points, he also said that he was generally interested in the enormous amount of debt that is being created by the government and monetized by the central banks.
Alright, then tell you what, let's shift focus away from the Fed then, and the number of Americans filing new applications for unemployment benefits dropped to a 4-month low, pointing to solid job growth in September and offering confirmation that the economy continued to expand In the third quarter, weekly jobless claims fell by 12,000 to 219,000.
Moving on, Bank of England pressed pause on the rate cuts following their initial cut in the month of August. This even after the Federal Reserve lowered the rates by 50 basis points. Bank of England Monetary Policy Committee highlighted a gradual approach to easing, with services inflation still quite elevated. Additionally, the central bank expects the UK economy to retrace steps back to 0.3% growth per quarter in the second half, especially after the economy recently exited a recession.
Let's take a look at some stocks that dictated moves in after hours when global logistics giant FedEx delivered a miss in their first quarter earnings. The company said its business would slow in the year ahead and reported a worse than expected quarterly profit in a warning sign about the direction of the US economy. Shares plunged 11% in extended trading.
And back home, some bullish macro commentary coming in from S&P Global. They're expecting India to become the third largest economy and a transition to the upper middle income category by FY31. This on account of maintaining GDP growth of 6.7% until the end of the decade. Additionally, S&P Global expects the size of India's nominal GDP to nearly double over $7 trillion by FY31 versus $3.6 trillion in FY24.
Alright, then that was your daily dose of morning news and updates to go with your morning cup of coffee. But we'll be back with more. So see you on the other side of that break with the Asian market update then.
Welcome back. You're watching Market Cafe right here on ET now. Let's take a look at what the Asian screen is looking like. Remember, we got a very good handover coming in from the US markets, but is that trickling down to Asia? Let's take a look. Shanghai markets have just opened up for trade. Remember that the banks have actually kept their lending rates unchanged. Shanghai markets are trading flat with a negative bias, while on the other hand, Nikkei, that is the Japanese market, seeing strong gains of about 2%. Remember, all eyes on what the Bank of Japan does today, because you will have the decision out around 9 o'clock or so what the Bank of Japan is going to do. Remember that last month we saw the carnage in the Asian markets led to the change in the policy stance coming in from Bank of Japan. So that monetary or the stance coming in from the Bank of Japan now becomes pretty crucial. So all eyes on what Bank of Japan will do, and Nikkei for now holding on to gains about 2%. Let's switch focus. Hang Seng is also participating in this rally, seeing a uptick of about 0.7%, not in tune with what Shanghai is doing at this point in time. And Kospi, on the other hand, that one also is actually maintaining its stance as of now. When you talk of the markets, is seeing gains of about 0.9%. But take a look at what the GIFT Nifty is doing, and what the GIFT Nifty is indicating for all of us at this point in time is with the GIFT Nifty indication, it looks like we will open up for trade in the positive territory in line with what the Asian peers are doing. That's what the screen is throwing up at this point in time, Shreyansi.
Well, absolutely. With that Fed cheer on Wall Street and that very strong handover coming in from Asia, let's really see how that pans out for us. But it is looking quite upbeat this morning.
Welcome back. You're watching Market Cafe right here on ET now, and it's that time of the year again. The annual Apple event has made waves as the company unveiled its new generation iPhones, the iPhone 16, the iPhone 16 Plus, iPhone 16 Pro, as well as iPhone 16 Pro Max. And actually, without further ado, let me actually go across to Asta. And the reason why we're going across to Asta is because these sets will be hitting the shelves today right here in India, and Asta is standing by at the Apple flagship store in BKC in Mumbai. A very good morning to you, Asta, and it is 7:20 a.m. to be very precise, and I can see a lot of crowd behind you.
Absolutely, we are waiting at Apple BKC, and as you can see, there is a lot of people behind me, and there is a 6-lane queues over here for the pre-booking, and already people who have made the reservations, people have started standing in queue from 3 a.m. from at night, and the gates will open very soon at 8, and then people can enter and make their first purchases from Apple. But we have spoken to people, and they have come from all the way from Gujarat, Ahmedabad, even Goa to purchase their phones, and not even one pieces. They are planning to get 7 to 8 pieces for their Apple phones, as the iPhone 16 have already come. There are 4 models, and people are buying the phones in bulk. That's why you can see the people, that is the lane for the pre-booked confirmed reservation, and 4 lines from here are people who will right now book and reserve their iPhones. There are more than 1,000 people, I guess, we have just learned from our sources, and the gates will open at 8, and there is a huge excitement. But behind the people are shouting, hooling with excitements, and they are already ready in line to buy the iPhone 16, which is quite less pricey as compared to 15, but people are buying in bulk, approx 7 to 8 pieces in one go, which came directly from Ahmedabad and Goa, which are standing here since 3 in the morning.
Asta, and I really hope that you've actually booked your slot in that queue, because given the fact that the queue is pretty long, and is it time to say goodbye to your Android phone?
Well, I think because as number of people you can see, not even one person have an Android phone right away, but they are all waiting for their iPhone 16 pieces, and people have come here which already were there year before for iPhone 15, but now they have to change once again, go with the trend, go with the changes. And I've spoken to people as many, and they have all waited for 1 year, which is very long time for them, and they are purchasing iPhone 16 right now because it has a great feature, as they say. It comes with Apple Intelligence. The camera is far better, the action button is far better. Also, they have a reasonable price this time, because some of the parts are being manufactured in India, so they are quite excited for this purchase, and they are waiting for the doors to get open so that they can rush in and grab their phones.
Absolutely. Thanks, Asta, for that roundup coming in. So looks like it's the apple of a lot of people's eyes, but let's get a move on then, and let's take a look at some rebalancing. FTSE and Sensex rebalancing could lead to inflows on September 20th. Stocks the likes of GET&D, Endurance Technologies, as well as KEI Industries could be seeing some good gains coming in. In fact, we also have Somit who's standing by with a roundup of that. Somit?
Well, couple of rebalancing that will be happening today in the last half an hour of trade. Firstly, it's related to the FTSE September 2024 changes, and second one is the Sensex rebalancing because of the weightage changes that we'll be seeing. Now, when it comes to FTSE, around $1 billion of inflows are expected. The highest amount of inflow is expected to come in on ICICI Bank, around $236 million US dollars. Then there is Kotak Mahindra Bank, which could see an inflow of close to $105 million US dollars. Apart from that, in fresh additions, it's GET&D, Endurance Tech, KEI Industries, Hitachi Energy, Lloyds Metal, which could see an inflow of anywhere between 17 to 53 million US dollars. Then there is IRB Infra, Escorts, Kubota, Motilal Oswal, Central Bank of India, Bank of Maharashtra, Bharat Dynamics, Hudco, Cochin Shipyard, which could see inflows of anywhere between 7 to 37 million US dollars. Mahindra and Mahindra could see some outflow of close to 65 million US dollars on the back of lower weightage in the FTSE index. However, that could be offset by around similar amount of inflows that is expected when it comes to the Sensex rebalancing. Now, in Sensex rebalancing, Mahindra and Mahindra's weight is increasing, and that's the reason we are expecting a similar amount of inflow on that front. Apart from that, it's Bajaj Finserv and Axis Bank, which could see an inflow of close to 7 to 30 million US dollars. Then there are multiple stocks which are seeing lower weightages in the Sensex, and that is Reliance Industries, Ultratech, Infosys, HDFC Bank, ICICI Bank, TCS and L&T. And on the back of lower weightages, the outflows expected in these stocks are anywhere between 5 to 12 million US dollars.
All right, thank you so much for that, Somit. But all eyes today also on Vodafone Idea. Remember yesterday that particular counter plunged in trade after the setback coming in from Supreme Court. So Vodafone Idea may be having tough time with lenders as well in this order to raise fresh loans. The ET now has learned from the sources that lenders, including PFC and REC, are reluctant to provide fresh loans to the telecom company. Ankur Mishra is here with all of those exclusive details. Ankur, good morning. Over to you.
Yes, sources say that lenders are reluctant to give a helping hand to Vodafone Idea. What we have been given to understand that PFC and REC, both the lenders were approached by Vodafone Idea, but for now, the companies, the lenders are not inclined to lend to Vodafone Idea. There was a discussion between PFC, REC and Vodafone for lending around 25,000 crore. The talks were on for funding for capex as well as maintenance. But despite discussions, no formal proposal was submitted by Vodafone Idea. Also, there were separate talks with the State Bank of India for lending, but we understand that PFC and REC were waiting for a signal from State Bank of India because they want to go in consortium lending, and State Bank of India itself has not taken any decision on lending to Vodafone, and therefore the talks have not been fructified yet. Remember, the company has raised 18,000 crore through follow-on public offers successfully this year, and overall the board had approved raising up to 45,000 crore through different means, and the lending through various means was checked by company through various banks, and PFC, REC and State Bank of India were one of them, and we need to wait and see whether or not other lenders give a helping hand to Vodafone Idea or not.
All right, thanks Ankur for that lowdown coming in on the telecom sector. But let's keep it going with this space then, and let's take a look at what brokerages had to say, because you do have BofA that's come out with a note. They're maintaining a buy rating on Indus Towers. They cut the target price to 450 rupees from 490 though, and in terms of the AGR decision, they're saying that this is not direct, but then there's a derivative impact that they're still penciling in on Indus Towers, and they're also talking about how there's multiple derating that is also likely for Indus Towers, and they're also highlighting a low chance of lump sum payment and any special dividend as of now. So that's the verdict coming in on Indus Towers from BofA. Let's also take a look at what Morgan Stanley had to say about the space as a whole, and they're talking about how there's no potential AGR relief in terms of Bharti Airtel's leadership. That is something that they're seeing aiding weak peer balance sheets as well. And when you take a look at what else they had to say, they're talking about how Bharti Airtel is in a sweet spot at this point, because they're highlighting how Bharti Airtel may be improving given the weak balance sheets of the competition, and because of all of that, they're highlighting how Bharti Airtel is in a good spot. Moving on, let's also take a quick look at what UBS then had to say about Vodafone Idea, and when you take a look at what they say, they're talking about how the fair value per share can range between rupees 12 to 24 rupees, and they're also talking about how the stock is now marginally below that particular fair value that is implied. They're not ruling out an equity conversion or deferral, and they're also talking about how it does remain to be seen whether these measures will be NPV positive for equity holders as well. So that largely is the kind of handover that we have from brokerages this morning, Cheryl.
All right, let's move on then. Let's put the spotlight on IIFL Finance, because this particular counter was in focus yesterday, but there's a huge relief that is actually coming for IIFL Finance. The RBI has now lifted the restrictions from its gold loan business, and this is effect immediately. Ankur is waiting by to tell us more about that as well. Ankur, tell us what exactly RBI has done this time around. Looks like a huge relief coming in for IIFL Finance.
Yes, Reserve Bank of India has lifted restrictions on IIFL Finance as far as a gold loan business is concerned. Remember, there were restrictions which were imposed on company after there were few of the violations which were found by the regulator. It happened in March 2024, and the regulator said that there are violations which are of concern. In fact, IIFL Finance was barred from disbursing new gold loans and for assigning them to sell. But now the company can restart the gold loan business as usual, as these restrictions have now been lifted. There was an audit which was done by the regulator. It was completed back in June, and finally, after the submission of the company on adhering towards norms, the regulator has agreed to lift the restrictions, and the company can once again start its gold loan business.
All right, thanks Ankur for that update coming in on IIFL Finance. In fact, let's take a look at what brokerages had to say, and you do have InCred that's come out with a note. They're talking about how the RBI has lifted the embargo on IIFL Finance for gold lending, and they're talking about how this should be largely taken as a positive news. And at the same time, there's also market share gains that will be slower, and that is something that they're highlighting. In terms of what else they're highlighting, they're talking about how channel check indicates healthy demand for gold loans amid rising gold prices, and that is something they're highlighting. In fact, they're also going ahead and saying that gold lending is the flavor of the season. Benefits across parameters is what they're also penciling in. And in terms of what else they see among gold lenders, in terms of their picks, there is Muthoot Finance that they have for its stringent lending practices, as well as strong management pedigree and high brand recall value. So that is something that we do have Incred saying about IIFL Finance, Cheryl.
Yes, absolutely. So a huge relief coming in for IIFL Finance, but you need to see how they actually translate for that particular counter. But if you move on and you have the FATF, that is FATF, that has hailed India for achieving a high level of technical compliance with its recommendations and taken significant steps to implement measures to tackle terror financing as well as money laundering. My colleague Prakash is here with all the details. Prakash, over to you.
Yes, an important development coming in as we are learning from our sources that ethanol blending in petrol has been increased to 13.6% as of August 2024. A very significant development coming in as the government is confident to achieve 20% ethanol blending target by the year 2025. When it comes to ethanol prices for next ethanol supply year, we are given to understand that the Oil Ministry is working on a proposal to revise ethanol prices for next ethanol supply year. Interministerial discussion is already underway. In fact, consultations are also being done with all the stakeholders, including oil marketing companies, and the final decision will be taken very soon. Along with that, we are given to understand that the Food Ministry has already sent its input to the Oil Ministry, where it has recommended to increase ethanol prices by rupees 2 to 5 per litre for next ethanol supply year. The Oil Ministry is working on a proposal, and the final cabinet note will be sent to the Union Cabinet for its approval very soon. Along with that, when it comes to ethanol prices being produced from food grain items, that will also be decided in sync with the cabinet approval.
All right, thanks Prakash for that update coming in. Moving on then, as it celebrates 90 years, Bank of Maharashtra unveiled its credit facility with cash flow based lending products. In fact, my colleague Astha Chopra caught up with Nidhu Saxena, CEO Bank of Maharashtra, to understand what exactly their growth plans are going forward. Listen into what they had to say then.
We took up one initiative for this foundation day, and in a period less than 2 months, we have been able to not only formulate this product, we have operationalized this product, and almost 27,000 plus MSMEs have been benefited. And I have done this partnership with a leading NBFC, and entire process is digital. End-to-end is a digital process, and I'm getting a good pricing, and on one side, the MSMEs are getting that essential credit dosage. The other side, I'm also seeing a lot of value to me in this transaction, in this partnership. And I have gone to see the genesis of the guidance that has come in the budget. We have followed that, and we have seen that we have benefited ourselves, the MSMEs, and the objective in large has been fulfilled.
Bank of Maharashtra was supposed to release their QIP. Any details on that, if you can tell us?
So, as I said, see, today if you look at my capital adequacy, we are at a comfortable CRAR of 17%. We are although always mindful of what nudges are coming from our regulator, that these are the best times, and keeping in mind the best times, you should keep provisions for the times if tomorrow the cycles should be seen turning. So going forward, there is no emergent need to raise capital, but I have two considerations in mind. One is that I would want to maintain this healthy CRAR, which is much above the RBI minimum regulatory prescription, but I will going forward maintain this 17% around CRAR, and if that be, there is a case for me to raise capital, raise money for funding my growth. So that is the requirement number one. And the requirement number two is somewhere around, today my Government of India holding is around 86.46. To comply with the SEBI mandate of 25% minimum shareholding, I have some 11 bips to do that ground to cover.
All right, moving on then. Firstsource Solutions has announced an expansion into Australia and New Zealand. The company will be headquartered in Australia's Melbourne, and they stated that they plan to create 400 new local jobs over the course of the next 5 years. Sanjeev Goenka, who is the chairman of RPSG Group, talks about which segments will drive the growth of the company going forward. Listen in.
You know, we expect almost all our segments to grow for us and grow well. And we are fairly buoyant about the rate of growth, and the more we grow, the less we will need to spend on that growth, because we have already invested in that growth. We have invested in the infrastructure, we've invested in the people, we've invested in the team that we need to get to those numbers. So now the growth in G&A will be less, but the growth in revenues will be much more. So as we go on, you will see bottom lines increasing.
All right, then time for a quick break right here on Market Cafe. When we come back, we'll tell you which stocks you should keep on your radar bright and early this morning, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET Now, and let's take stock of all the stocks that will be in focus in today's trading session. We have Ria standing by with that list. A very good morning to you, Ria. And which are the stocks that one needs to watch out for in trade today?
Yes, good morning. So let's take a look at all the stocks that are going to be in focus today. First up, we have Axis Bank. Now, SEBI has barred Axis Capital from merchant banking in the debt segment, and the bank has issued a clarification statement saying that ASL is of the view that its merchant banker, arranger and underwriter related activities for any issue or for the offer for sale of securities in the debt segment were bona fide and in compliance with applicable regulatory provisions. And they've also said that no loss has been caused to any investor or market participant from such activities as on date. Now, SEBI has not imposed any other restrictions on ACL, and Axis Capital will continue to operate in all other business activities, including in equity capital markets, M&A, private equity and the institutional equities domain as well. We also have NTPC in focus today, for which the board has accorded the investment approval for two major projects. The first one is the Darlipali super thermal power project at an estimated cost of rupees 11,130 crores, and the second one is the Sipat super thermal power project for an estimated cost of rupees 9,790 crores. Let's also shift focus to Infosys though, which is going to be in focus since they have extended their strategic collaboration with Posti, which is a leading delivery and logistics service provider in Finland and in Sweden as well. And further, they have also agreed to invest in a space tech startup called Galaxy for up to rupees 17 crores or roughly $2 million as part of the Infosys Innovation Fund. We're also keeping an eye out on Phoenix Mills today, since Casper Realty Private Limited, which is a wholly owned subsidiary of the company, has been declared as the highest bidder for two prime city-centric plots in Mohali in Punjab with a combined value of approximately rupees 891 crores. And lastly, we're also watching out for Power Grid Corporation, which has been declared as the successful bidder under the tariff-based competitive bidding scheme to establish interstate transmission systems for a project in Gujarat.
Yeah, so there you have it. Those are the list of stocks that you should keep an eye on. But moving on, metals will also be in focus on the back of brokerage reports coming in from Macquarie as well as Morgan Stanley. Now, Macquarie is bullish on the space with an outperform stance. While when you take a look at Morgan Stanley, they have a mixed view coming in, equal weight on a couple of counters, underweight on a couple of counters. Tell you what, let's go across to Ashisha, who's standing by to help us understand the rationale. Ashisha, which are the counters that make it to the brokerage radar this morning then?
Well, yes, two important brokerage notes that have come in on metals. First up, let's talk about Macquarie, where they believe that resilient fundamentals and moderating input costs, these are the two factors which makes them very bullish on this counter. So they've gone ahead and increased their target price on many of these stocks. First up, let's talk about steel, where they are very positive. They've gone ahead and upgraded JSW Steel to an outperform rating, hiked their target price to 1,077 for JSW. SPL, they are maintaining the outperform increased target price at 1170, and for Tata Steel also they've gone ahead and hiked their target price to 171. They believe steel stock multiples should be seen in the context of improved return on equity profile, and overall they are very bullish on steel counters. As far as Hindalco is concerned, over here also they believe that Hindalco will benefit from resilient aluminium and firm alumina prices, and also the capex plans that the company has undertaken. So they are maintaining the outperform stance on Hindalco. They've gone ahead and hiked their target price to 760. As far as Coal India is concerned, they believe that cost focus, volume growth and 5% dividend yield is what makes them very bullish. So they are maintaining outperform. 541 is the target price that they've given for Coal India. Meanwhile, Morgan Stanley has also come out with a report on steel companies, but here they are not very bullish on most of these counters. They believe domestic demand environment continues to remain strong, but so does a supply environment, and that is why they are not very positive. Steel stocks, they believe, have underperformed over the last 1 year or so, and they expect the trend to continue going forward. So for SAIL, they are maintaining their underperform stance. 105 is their revised target price. Tata Steel, 135 is the target price. JSW Steel and JSPL also, they've gone ahead and upped their target price for both these counters. So mixed reviews coming in as far as steel sector is concerned from Morgan Stanley, but Macquarie has gone ahead and increased the target price for most of the stocks in the metal sector.
All right, thank you so much for that, Shesha, for outlining exactly what both of these brokerage houses have to say on steel counters. But let's get your market voice then. S. Narain, who's the ED and CIO of ICICI Prudential AMC, he spoke to us about the most talked about large cap versus the small cap, mid cap debate. He's also given his take on the financials as well as the auto sector. Let's hear about it.
There is no fear. Maybe there is no greed in banking and financial services, but there is no fear in the market. We are big believers in asset allocation at this point of time because that is a way of limiting risk in investing in equity in these markets. And we are big believers in large cap over mid and small cap at this point of time. Excess holding by FI issue is coming to an end. So that's one of the reasons why we are so positive on financials. The only challenge with financials being your most positive sector is it is not a defensive sector. And when auto was doing badly, we did launch the transportation and logistics fund. And the investors in that fund made very good money. But today we are we are no longer in that cheap zone in auto at this point of time. Value investing is doing asset allocation today, not putting all your money in equity at one go at this point of time. Clearly, value investing is asset allocation. And if you look at it, if there are, if for example, global fund limits were open, there would be an opportunity to invest globally at this point of time because there are many global markets which are cheap at this point of time. So I would say that asset allocation is the best mantra of value investing at this point of time.
All right, then S. Narain is quite positive on financials, so let's keep it going with this space. But let's zoom in on Federal Bank then. That has grown 8 times over 14 years under the leadership of Shyam Srinivasan, and he also believes that this growth is likely to sustain. He also adds that the profit CAGR of 18% is going to be remaining intact. Here's a slice of that interaction in our latest edition of CEO at Work. Listen in.
We've, like you said, CAGR of 18% plus. We haven't had any negative year. We remain well provisioned on all counts, not just credit, even for wage and all that stuff. I think this kind of momentum is possible. We are not into this crazy growth period, and if we sustain this 18-20% CAGR for the periods ahead, looks very possible.
But there was a dark patch, and I remember on the other side when we were asking you questions, you had to take some write-offs, especially some, for some metal companies and some steel companies. There were some corporate loan issues which had come for the industry and for Federal Bank also. How are you ensuring that it does not get repeated? Because, economy, it follows a cycle. What looks great today may look bad tomorrow. So how will you ensure that in the next downturn you're protected? Unintentional, but you need to protect yourself.
I think valid question. So the toolkit available today, not only just internal data, market data. You see, the benefit of CRILC and CIBIL and the modern day availability of data and information, you must be either living in a cave or blind not to use that. right? I think banks have wisened up to it. Even if we don't, the regulators insist that's happening. So I think the best thing that's happened over the years is the public sharing of content that nobody in their wise sense can try to do stupid stuff unless they want to be cowboys, which is not in our DNA. So I think availability of information, underwriting capability of the bank infinitely better. You've seen through this entire period, Nikunj, other than the top two, HDFC and Kotak, no bank has had better than us in gross NPA. Forget net.
Yes.
We have never crossed 3.5% gross NPA. And in industry which had 11, 12, 13% gross NPA.
20% plus for some PSUs.
So that speaks to the fact that we haven't been very courageous in taking credits, and there's a downside to it. It's a conscious trade-off. We didn't chase the margin game. We went out of the credit quality game, which I think is the right thing from our point of view. So my confidence comes from the fact, even today, if I look at my early warning signals, what is on the dashboard from, as we were sharing with my successor too, mercifully, it's looking good. We don't see any names on the windscreen which is looking...
So there is no fog on the windscreen?
Pray it stays that way.
On that note, we are out of time on this edition of our Market Cafe. It's a goodbye from Shreyansi, myself and the team that put the show together. Thank you so much for watching. We will see you next week.
If you like this video, then like, share and subscribe to ET Now.